If you're a passive income investor, or in other words, a dividend stock investor, this video is great for you. I'm going to answer which one of these three dividend stocks is the best one to buy. Pepsi stock, Deere stock, or Caterpillar stock. I'm going to rate these stocks on four different metrics, starting with the dividend yield. So let's get right into it. Pepsi's dividend yield most recently was 1.96%. Deere's dividend yield was 1.04%, and Caterpillar's dividend yield was 1.9%. So in among these three, if you're looking for the highest dividend yield, Pepsi is the one with the highest dividend yield. But that's not the only thing to look at, right? If you're investing in dividend stock, there's two sides, there's two parts to your total return as an investment. Number one is the dividend return, and number two is the capital gain return. So let's keep looking at these stocks, and we'll make a determination by the end of the video. The next thing I wanted to look at is their their earnings per share for the trailing 12 months and the dividend per share for each of these three companies for the trailing 12 months. And what I want to see is how much their dividend per share is of the overall earnings per share, because a company pays dividends from its earnings. If it's paying too much in dividends from its earnings, that's not sustainable, and something's got to give there, right? It's like a household. You can't spend too much money out of your income, right? You got to save a little bit. You got to reinvest some of it. And at the same time, if you were to spend more than you earn in any given period, that additional spending is coming out of your credit card or maybe your savings, either of which is not sustainable. So that's the same for businesses. So for Pepsi, it made $5.88 in earnings per share, and it paid out $4.52 in dividends per share in its last 12 months. So reasonable ratio there. Nothing to be concerned about as a dividend stock investor. Deere generated $23.33 in earnings per share in its trailing 12 months and paid a dividend of $4.36. This is the smallest out of the three, the ratio, suggesting that Deere has more room than any of these three stocks to increase its dividend. So while it may have the lowest dividend yield right now, there is a potential that it could increase its dividend. Caterpillar earned $13.22 in earnings per share in the trailing 12 months and paid a dividend of $4.62. So the ratio is better than Pepsi's, but not as good as Deere's. The next metric I wanted to look at is revenue growth. And for Pepsi, it's been doing really well ever since the outbreak of COVID-19, right? As people have been spending more time at home, we've been closer to our kitchen, we've been snacking more, grabbing Frito-Lay chips, which is owned by Pepsi, and grabbing Pepsi beverages. And it's all been good news. The company's growing its revenue way faster than it normally did in the years before the outbreak. However, this may not be sustainable longer term. However, over the next 4 to 8 quarters, this could persist. Deere, meanwhile, revenue growth of 36% in its most recent quarter. The company had instituted double-digit price increases, and demand for its products is soaring. It's got a backlog that it doesn't think it's going to get through until the end of 2023. This is as inflation has risen and commodity prices have risen, and the company has created some innovative technologies in its new products. Demand is soaring. Caterpillar also, demand is soaring, 20% growth in its most recent quarter. The infrastructure bill in the US and stimulus bills across the world since the outbreak of COVID-19 has created an increase in demand for construction mining equipment like Caterpillar's. This is likely to persist over the next 4 to 12 quarters, as it takes time for federal and state governments to work through the backlog of projects that they recently green-lighted as a result of infrastructure stimulus packages. Finally, I wanted to look at the valuations using the forward price to earnings ratio. Pepsi is trading at a forward PE of 22. Deere is trading at a forward 1-year PE of 14.7, and Caterpillar is trading at a forward PE of 14.48. So, to answer the question, which one of these three is the best dividend stock to buy for passive income investors right now? I'm going to say Deere is the best dividend stock to buy right now. Although it has the lowest dividend yield right now, the potential for capital gains and dividend increases in the future is highest among these three competitors. All right, so that's all I've got for this video. I hope you've enjoyed it, and I truly appreciate your viewership. I really hope you'll tune in next time for another video. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.